Hello and welcome to Pro Trader Strategies Market Commentary for Thursday, November the 10th. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, I'm here to teach you some different strategies you can implement into your own portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. Not a whole lot of economic data to talk about. Over in Europe, we did get French industrial production came in at negative 1.1%, was expected to be a positive 0.3%. We also got the preliminary non-farm payrolls in France was 0.3%, expected to be 0.2%, so that's a little bit better than expected there. And then industrial production in Italy came in at negative 0.8%, but it was expected to be a negative 0.1%, so a little bit better on that front. Here in the United States, we got initial unemployment claims, came in at 245,000, expected to be 267,000, so lower on that front is good. We also have Fed Governor Bullard speaking, and natural gas storages here in the United States came in at 54 billion cubic feet versus the expected 53 billion cubic feet built. So, overall markets right now, we've got a real mixed bag right now, although crude oil is relatively unchanged, down 60 cents or so, but right at the value area, getting really comfortable with that spot at $44.66, right on the money there. Gold coming off a little bit, down $9 on the day after yesterday's wild ride in all of the markets across the board. We're going to talk about that. But as you can see, gold just, had a massive move, ended up almost unchanged on the day. But today, falling below the 200-day moving average yet again. Be interesting to see whether or not we can settle below that. If we settle below that, the bears are going to be looking to be taking control of that market. On to the bonds. Bonds, after yesterday's massive move, it was like an 8-point move. I can't tell you the last time that I saw the bonds have that much of a move in a single day. They traded up to a high of almost 165, one tick shy of 165 on the upside, which was right at the point of control for the most volume, or for the most time, and then the massive slide down to the downside on the 8-point move to the downside down to 156.22 from the open to the close. It was almost like a 5 standard deviation move, just absolutely insane. It was a pretty crazy day. I guess it did kind of make that move back here near the Brexit thing, but at the end of the day, just a crazy move. That was only a 6-point move really on that day, but almost an 8-point move yesterday from 5 to 7, we could say. So just pretty crazy. I'm beside myself with that move yesterday. It was just crazy. Then on to the Dow Jones. Dow Jones is actually up 150 plus points right now, and the overall market, blue chips, people putting their money to safety, it looks like right now, because if we look at the NASDAQ, it's down 92 points right now. That's the tech side. So people pulling their money out of the tech sector and putting their money in a lot of those blue chip safe haven type stocks, it looks like today. So we're seeing a bit of a move there. E-mini S&Ps, again, just unchanged on the day. So we got the Dow up big. We've got the E-mini S&Ps unchanged, and we've got the NASDAQ down, so and bonds down. So just a real mixed bag. As you can see, it's pretty tight range here, although we did trade up, make new highs, traded up into the 2180 area, which got me moving in my position. So with TLT, I decided to cover this trade after yesterday's move, got out of that one. I just didn't want to risk any more money in it. I did it really small, and I did it as a long-term type trade, but just decided to pull the plug on it. And originally what I did this for one of the webinars, and I had on the March of 2017 that expire on that 17th of March. And I bought the 125 calls, and then I sold the October 138 and a half calls, and I paid a debit of $11.79 for that. Then I ended up rolling those October calls into the November and I rolled them down to the 135 calls, collected another $1.17 for them, and then pulled the ripcord on it today, cut my losses on it, and bought that March 125 November 135 called calendar for $3.72 for that. So not a very pretty sight on that one. Thankfully, I did it really small, but after yesterday's move, that was just insane. So I decided to just pull the ripcord on that and move along. Then in SPY, I have on a strangle in there. I have on actually two strangles in there, but I ended up rolling the one that expires here relatively soon. It actually expires on the 18th of November, so in 8 days. It was working out pretty good as a strangle, but with yesterday's massive move to the upside, I started getting tested on my short calls. So I decided to, on my short calls, which is the November 216 calls, and I had on the November 198 puts to create that strangle. So I rolled my 198 puts up and basically created a straddle to defend that. Covered it a little bit early before the pullback really started happening, but it was up testing my break-even area. So I decided to roll that, collect a little bit more credit. I ended up rolling the November 198 puts up to the 216 puts, and collected another $1.07. Sure enough, it rolled, and I probably could have collected another 40 cents for that, which would have been really nice. But hoping that we'll stay kind of trending sideways here and stay relatively close to this 216 handle for the next few days, and try and get a little bit more volatility crush out of that. But that one I did just mechanically to defend it. The other one that I have on is a little bit further out in time. I did that one in the I have that one in the December, and I'm also short the 217 calls in there, but my break even was slightly higher on that one, as I had put that one on a little bit later. So that one, trying to take advantage of some volatility crush happening too. So that one's looking okay right now, but if we can get a little bit more of a pullback, that'll be nice. So especially after my 216 straddle expires. So that's what I'm looking for that one. I haven't added really any more trades. I'm actually trying to get out of my AMGN. It's not looking real good. It was looking a little bit better earlier this morning, and haven't added any more trades as of now. So that's about all I got for you guys today. Tomorrow's webinar is going to be on the iron condor, so that should be a really good one. It's a defined risk strategy, good for an IRA, something everybody should know about, and follow my rules on this, because I have some specific rules on creating the iron condor to increase your probability of success. Now, if you're just doing an iron condor haphazardly, there's actually a better way to do it, and I'll teach you all of that tomorrow in the webinar. You can go to protraderstrategies.com, sign up for that. That's all I got for you today. If you can't take that, take it easy.